Let's do a quick review of itemized deductions here because this is where that fits in your taxes. So every US taxpayer gets one chunk of their income tax-free, okay? This tax-free chunk of income is you get to choose the bigger of two situations. You can either get a fixed amount of tax-free income, and that fixed amount we call the standard deduction, or you can get a variable amount, and that variable amount is called itemized deductions. Now, you're only going to itemize if you have more itemized deductions than the standard deduction. Why? Because you get to take the bigger number. So the logic is very simple here. You're going to take the one that's bigger. If you don't have itemized deductions that are greater than the standard deduction, you get a bigger deduction by taking the standard deduction. The standard deduction is around $13,000 for an individual. Double that if you're married filing joint. Cut that kind of straight down the middle if you're head of household, meaning you on your own support dependents. Okay, so the standard deduction is generous, it's large. Now, what are itemized deductions? A really common mistake I see is that people confuse their business deductions with itemized deductions, and business deductions have nothing to do with itemizing. So please, please, please understand, if you have a profit motive, you get all your business deductions. We don't even have to worry about that conversation. Itemized deductions are something different. They are charitable contributions, medical expenses that exceed 7.5% of your adjusted gross income, mortgage interest, and state and local taxes capped at $10,000. Those 4 items you put together into one bucket. And if that bucket has more money in it than the standard deduction, so to repeat, around $13,000 if you're an individual, around $26,000 if you're married filing jointly, somewhere in between that if you're head of household, then you will only itemize if you have more than $13,000 of those 4 items, those 4 itemized items, okay? In other words, if you're not a homeowner, you're very unlikely to be itemizing in the first place. And if you're not giving, $3 million to the Metropolitan Opera each year, you're also probably not going to get any deduction for your charitable contributions, okay? So because charitable contributions fall in that itemized bucket, you're only going to get any deduction for your charitable contributions if all 4 of the items in that itemized bucket are greater than your standard deduction for your filing status. Okay, so I hope that clarifies who does and doesn't itemize. Just to lay it out a little more clearly, most people who are not very well heeled or not homeowners, so renters, most of us, we don't itemize. We take the standard deduction. But don't worry about your business deductions. You absolutely still get those.